Since value added is a zero-sum game, you have to ask, who are you playing against? What is this, who are you going to the poker game with? And, do you want to do that?
Probably not. Would you want to go in the poker game against poker legends like Tom Dwan and Phil Ivey? Probably not. Would you go into the stock market game playing against guys like Warren Buffett and Ray Dalio? Again, probably not.
And as you talk to people in the real world, is your sense that people understand what they're up against when they might buy a stock or try to time the market?
The short answer is no. Most people think that they are superheroes and they're super smart, and they hear all these stories of stupid day traders on YouTube and the internet making lots of money day trading and quitting their corporate jobs, which sells them a sort of a miracle fantasy that people want to try out. So they end up getting into the game and they have no idea who they're playing against.
Institutional investors who are smart, by and large, understand that. The average man tends to be much more reactive. If you look at the purchases and sales that they make, when something goes up, they're more likely to buy it.
That's right. The average man is an emotional trader and not a rational investor. Okay.
They think, that's a good investment. They don't know how to measure that in terms of, is that a much more expensive investment that's more likely to go down? So that's why, you put ads in newspapers and they say, that's what had that return. That's what they're attracted to. So they tend to buy high and sell low. And so the average man should not be playing this game in that way.
Of course not. If your view of why you should buy and sell the stock is because I feel good this day or I feel that this stock will go up, you should never buy it based on emotions and feeling in that particular day. So I ask a lot of people why they buy certain things, such as Bitcoin, stocks, penny stocks, and whatnot. It's the thesis is always, I know it's going to go up. I can feel it, and that is just a non-scientific way to approach investing.
They should be playing the game, or humility. If you think that you're good at playing the game, just make sure that it's like going to the poker table or going to the racetrack. Do it with a little bit of money and watch it and get the best advice that you can to know that you're going to be able to take money out of the system rather than put it in.
That's right. If you're going to play the game as a small-time investor, whether it's in stocks, bonds, or cryptocurrency, just know that there are bigger and smarter fish out there, and that you are essentially gambling because you have less information, and you're probably less smart and not less knowledgeable than them. So it's just pure gambling. It's having fun. I wouldn't put more than 5-10% of your total net worth into gambling.